Hello and welcome to today's Fintech Finance Virtual Arena. And today we're going to be talking about CBILS, open banking and alternative lending. And who better to join me than Simon Cureton, the Chief Executive Officer over at Funding Options. Simon, how are you doing?
I'm very good, thank you very much.
Chirag, how are you doing here today?
Thank you for giving me the opportunity.
Excellent. So Simon, can you tell me a bit more about Funding Options and yourself, please?
Sure. So hello everybody, and thanks for having me on the program today. So my name is Simon Cureton. I am the CEO of Funding Options, and for those who don't know, Funding Options is the leading marketplace for SME finance, both in the UK and also in the Netherlands. Prior to doing this role, I'll cut it short, but I had a long career in banking. So started out in investment banking in the UK, and then I've traveled the world quite a fair amount. So I've spent time in Hong Kong, spent time in Australia. I'm actually a dual citizen in Australia, having been there for 9 years. And that's actually where I started my fintech or digital journey back in Australia at the Commonwealth Bank of Australia. And then through a long and winding road, prior to Funding Options, I actually was a founder member of SME Loans, which is an alternative lender that started back in Q1 2017, Q1 2016, I should say. And then I made the transition to move across to Funding Options.
I'm the founder and CEO of Nucleus Commercial Finance. Started Nucleus just over 10 years ago now. And when we started 10 years ago, we were the true alternative lender. There was no fintech at that point of time.
Brilliant.
We started as a single product firm. Over the last 10 years, we have grown from 3 people to over 150 people. From offering one product to now offering over 5 different products, we can support businesses from £5,000 all the way up to £25 million across our product range. And it's been a fantastic journey and an absolutely large amount of businesses that we have supported during that time.
Yeah, I mean, that's such a breadth of different organizations to look after. So, I mean, today the discussion is going to be very much focused on open banking and that alternative finance, which is why we've got you here today. Because as you said, when you started, there was no fintech. So with that in mind, from your expertise, can you give our viewers a bit of background to the state of the credit industry pre-COVID, please?
I think pre-COVID, if you look at the UK market specifically, you are looking at a market which had over 300 lenders. I mean, from a borrower's perspective, I don't think there was ever a better time to look for funds. The amount of options available, different types of products, different pricing, depending on what the borrowers were seeking, they would always find something. So pre-COVID, from a borrower's perspective, it was really, really good times. I think from a lender's perspective, what we were noticing was that there were few lenders like us who managed to achieve scale, but there was a lot of other lenders who just never managed to achieve scale. And those lenders were already starting to struggle. On the P2P side, we had already seen some failures in the 12 months prior to COVID. And I think that was already being felt by the system. COVID probably exacerbated that for a lot of lenders, but there was already stress building, especially at the lower end of the market where people had very small books.
Pre-COVID, I would say that the SME finance sector as a whole, if I talk about the ecosystem, booming is not necessarily the word that I want to use, but I would say it was, we were really making huge forays in terms of innovation. The ecosystem, I think, was thriving pre-COVID, and the conditions were right for disruption, for innovation. There was a lot of collaboration between the ecosystem participants. And what I mean by the ecosystem, effectively, you've got obviously businesses on the one side, you have lenders on the other, you have marketplaces or platforms like Funding Options, you have multiple data partners that you could deal with, those partners that might be driving open banking, which we're going to talk about, open accounting. There's a number of different ecosystem players. And prior to COVID hitting, I think that the industry was, really starting to be successful, and the choice and competition available to SMEs was better than ever before.
That's absolutely brilliant to hear, because it's, especially with SME finance, it's something that is typically considered to be a maligned part of finance, and it's really shown that fintech can really actually impact a huge vertical of finance. But with that in mind, in the light of a second wave of COVID, especially here in the UK, what are some of the issues sole traders and business owners could now face that the wider population might not be aware of?
Yeah, it's an interesting question, and I think that it for me, looking back, and hindsight's always a wonderful thing. But if I think about the initial aftermath of the first lockdown, and let's face it, nobody in our lifetime had ever experienced those kinds of requirements, conditions, whatever you want to call them. There's a marked difference, I think, between this second lockdown. Quite simply, it's for a 4-week or a month, 30 days, whatever it is. It's for a 4-week period. As I understand it, there is a finite end date. The government again, let's hope indeed. The government again, I think, has reacted quite decisively. They've extended the furlough scheme. There have been support that's put out there to the sectors that are most impacted. And let's face it, it's the likes of hospitality, travel, entertainment, those kinds of industries that are really, really under the cosh. And we all walk past our local cafe and your local pub, and you really wish you were able to go in, but unfortunately we can't. So for those businesses, undoubtedly they're feeling the pain, and I think they're feeling frustration, clearly, because maybe they felt they were just getting things going. Trying to take the positives out of it, if nothing else, hopefully this does give us an undisturbed period, through December, through Christmas and the New Year into January. And then I think probably people will be happy to say, look, let's just get through that with some peace, and then see where we are in maybe January going forward. Bringing it back, I guess, to SME finance, we've seen less of an impact for the second wave than we did with the first. And the simple reason is we have a new norm state that people are aware of. When we first went into lockdown back in March, the bottom fell out of the market. The SME finance sector and every sector across the economy, I think, nobody had a reference point. So on the alternative finance side, as well as the big banks, all of the lenders effectively had to take stock. Some of them came out of the market, some of them simply, stopped lending. They needed to reevaluate the risk in the market. They needed to reevaluate the conditions, but there was no reference point. And so actually we saw a good month and a half that lasted throughout April, where the ecosystem, the industry, the sector was just simply scrabbling to find a direction. More positively since then, so from May forwards to today, we have been, I think, quite successful as a sector in finding that new norm. I wouldn't say we necessarily have a North Star that's out there, because conditions can change, but we have been, certainly at Funding Options, quite successful in putting new vital funding into the UK economy, into the Dutch economy. And we are up at near pre-COVID levels in terms of the total amount of lending that we're putting in, which is hugely encouraging. I know we're going to talk about the government schemes. They have helped in certain instances. There are always quirks with these kinds of things, but we're satisfied with where we are. I think with this second lockdown, because we have the new norm, lenders have been consistent in their lending throughout. They may have made only minor tweaks, which has allowed us to continue to support businesses as we were doing prior.
For a business to survive, one of the things needed is certainty. You need regulatory certainty. You need to be able to plan. Throughout, if people used to come to us and say, what is the advice you could give to businesses based on the applications you are seeing? And one of the constant things we used to say is, you need to plan. Don't look at your position now. You need to plan where you need to be in 3 months, 6 months, 9 months time. And that's how you should look for funding. Because every time you try to look for funding when you desperately need it, it's really difficult to get. Because when people analyze the business, they will see a business in stress. That's why that planning needs to be in place. Now with all the uncertainty around lockdowns, openings, it's just really difficult to plan that. A lot of businesses did plan that for the first opening. Then with subsequent lockdowns, it's incredibly challenging. And opening a business, it's not just about a government directive that the business can be open. there is a lot of time and effort that gets spent and a lot of capital that gets spent in reopening a business. If you are a restaurant, you got to get all the raw material again. You got to get all the ingredients again. You got to fill up the freezers again. It costs a lot of money to do all those things. So this constant stop-start scenario hasn't really helped the businesses.
Yeah, I mean, it sounds like a vicious circle, and no business wants to be in that. So with that in mind then, how do you at Nucleus and other alternative lenders look to use open banking, opening up of all this data, maybe even open finance if we get into the 20s and beyond? How is open banking working to solve these issues for your customers?
I think so if you look at the SME space, a lot of lenders have been trying open banking for a long period of time. Right? You're talking even pre-COVID, for almost 18 months' time, people were trying to engage with businesses and convince them that open banking was the way forward. But the user acceptance rate at that time were between 4 to 6% from the stats we were seeing in the market. I think CBILS has been transformational for us. And a large part of that, on the open banking side, what we have seen is, so we have processed over 10,000 CBILS applications. 98% of our applications have been via open banking, have used open banking, have completed open banking journeys. And it's been absolutely transformational. And it's not that open banking has changed. I think what has changed is that businesses were willing to try out more to get quicker decisions. And we were able to provide with a seamless journey where they could immediately see the impact of open banking. These deals where they used open banking, 86% of the deals we decisioned the same day, within hours.
Wow.
So we're no longer talking about days. We are literally talking about minutes and hours now in decisioning deals if people are using open banking. And it's the first time that a lot of businesses got exposed to that and saw the turnaround times and were like, hang on, this is fantastic. This is something we can buy into. So it has been transformational the last 12 months, especially from our side and from a market side. We would like to think that Nucleus, with the journey we created, have made a massive impact in terms of the open banking acceptance in the SME community.
The nature of what we do as a marketplace or a platform, if we are to be successful, we need to be absolutely at the forefront of technology and data analytics, without question. So for us, our key value, again, I'm going to mention ecosystem, our key value in the ecosystem is being able to take loan applications at scale from UK businesses, for example, filter, triage, and match to lender propositions in as quick as real time as we can, using data insights. We need open banking to power those insights. We need open finance to help power those insights. And to be quite frank, if you are a business out there that's looking for a loan valued at 50K and above, any lender out there to underwrite that application, they need to see your bank transaction information. They need access to your credit bureau profile, and invariably they would need to see access or have access rather to your management accounts. Now, in this journey, so in the innovation journey, in this digital journey that we're pushing, to have access now through certain partners to be able to actually obtain that information as part of an application process, so in sync. So we've built, for example, open banking is beautifully built into our application process. It's all seamless. It's an incredible new technology. For us, that's a key enabler to deliver the kinds of outcomes that SMEs want. They want speed, surety, a good experience. They don't want their time wasted. So being able to pull all of this information in now, in real time, in a seamless fashion, and pass it through to lenders that we've matched the business's requirements with, to pass that through via APIs, that for me is just a huge departure from where we were. Open finance, again, we have a partner in the marketplace, and it's going to be a similar kind of revolution. So having access to that account information in real time, potentially even on an ongoing basis with customers, will allow us to deliver not just the outcomes for SME finance, but potentially value add services that go far broader to really deliver benefits to UK SMEs.
It's going to be very, very exciting. Just when you think open banking is doing its best, open finance comes in. So I'm very excited as a consumer to see that. But you mentioned being satisfied with what the government had been doing and what the lenders had been doing in this tough period. How do you see open banking playing a role in CBILS?
So CBILS as a scheme has been helpful, I would say. I think BIBLES is a different beast. Let's not dwell too much on BIBLES. I think BIBLES has been great in that it's deployed, a large amount of vital funding into the economy very, very quickly. But for us, it's had a disproportionate distortion impact or distortion effect on the market and on the sector. CBILS has been more measured. Took a while to get going again, as the industry and the sector settled more into that new norm rhythm. But right now, today, just to give the audience an impression, we're doing, I think, 70% of our new lending is through the CBILS scheme.
Wow.
So this is where alternative lenders, and over time, a number of key alternative lenders are now accredited, obviously, to the CBILS scheme. So we're doing about 70% through CBILS and about 30% outside of. And maybe the fact that we're doing 30% outside of CBILS might surprise people. It's hard to know. The role of open banking, CBILS again is a loan product. It's very, very similar. Having access to bank transaction information, if the CBILS providers, if the lenders who are accredited to the scheme can consume open banking, then again, it will speed up that process. What I think we're still finding, as with any new technology, the pace to embrace the technology is different from one lender to another. So you have some lenders that might be beautifully set up to consume everything digitally and even give you an instant decision. Other lenders still take their time. They might take the bank transaction information in PDF format, in whatever format that suits their particular, state of play right now. But that will improve over time. Without question, COVID has increased the pace of digitization. So we're seeing businesses actually embrace open banking. So our adoption rates straight from the off were around 25%. That is going to increase over time. Same thing with open finance, and lenders' adoption of these new technologies again is just going to increase at pace. So again, for me, it's a key enabler. All of these technologies are enablers.
I would say since lockdown, really, not just the last couple of months, but over the last 9 months, a lot of businesses have survived because of the government support. And when I say government support, it's more holistic than just CBILS.
Sure.
Right? You've got the furlough scheme, the support from HMRC, the support from creditors not pursuing in these difficult times, rent holidays. So all those things have helped a lot of businesses survive. CBILS and BIBLES were great because they provided the capital for restart, not just for survival. With the extended lockdowns and the repeat lockdowns that we have seen, I think what is going to be challenging is a lot of businesses are going to come out much more levered than what they were before. And it's going to take time for the businesses to start getting up to speed again. The ones which survive, it is not that they switch from 0 to 100 immediately. It takes time. And I think that is what the real risk in the economy we see is. Once things start opening up, they have to start making all the payments again and everything. And all of that is going to hit pretty much straight away. And that can have a very material impact. So I don't know, I'm pretty sure we are hearing that additional schemes and stuff are being planned by the government, and they will be critical if the businesses need to survive. If the government wants the businesses to survive, and so far the government has spent 200 billion plus in supporting the economy, to really build on that, more support is going to be needed.
Interesting. Yeah. Would you say it would be like a cliff face almost, because they've come this far? All these businesses have, CBILS needs to be repaid, but to then just end it at the very end, would that almost be a cliff face ending for a lot of small, medium enterprises in the UK?
It will be. Again, see, at the end of the day, the way for the business to grow, the revenue needs to grow. If the revenue grows and the profit margin is good, then they will be able to repay the debts. They'll be able to meet all their expenses. But the revenue is not going to grow at a very rapid pace immediately. For some businesses, it will. But majority of the businesses are going to take months, if not years, to get back to their pre-COVID revenue levels. But with a cost base which is not as flexible to keep the same profit margins.
Yeah.
So it is going to take time, but at the same time, they've borrowed all this money that has to be repaid. So the cost base is going to expand, while the revenue is not going to expand at the same pace for many of them. So it's very challenging. I mean, and it will be interesting to see what happens over the next 2 months as CBILS rolls off. What are the things the government announces?
I think what we really need to see from the government, from Her Majesty's Treasury, and they generally act through the British Business Bank as well. And they've all done, a really, really good job, I think, in an incredibly tough environment. One of the things that I've been conscious of actually is, I think of everything through the lens of SME finance. Imagine Treasury trying to make decisions for the entire economy, for the entire population. The number of challenges they have is just, for me, I think it's quite mind-blowing. So I definitely tip my hat to them in terms of the work that they're doing. Specifically for SME finance, for me, it's really important that we have support from the government and from all of the various different bodies. I think we should be pushing the open banking agenda and the open finance agenda. We need to see a level playing field here in the UK. So one of the debating points that certainly happened with a lot greater frequency immediately after the first lockdown was this question of non-banks having access to the term funding scheme, so access to liquidity at favourable rates. We have a two-level playing field effectively, where you've got the alternative lenders that simply can't access that kind of funding advantage, and it's holding them back, to be quite frank. So we've seen the lending through the alternative finance sector, not purposefully, but it's just been a symptom. It's been throttled, so it's been limited by these lenders, by their access to credit lines, to viable liquidity, to allow them to obviously issue the government products or their own products outside of the government schemes. So that for me is something that I think we need to look at in depth. I think, and I think has already started, there've been a number of announcements recently, but we know that there will be, inquiries, in-depth research into how maybe we could have responded better, what can we do better going forward. And quite simply, I would love to see the government fully embrace the alternative finance sector to an extent that they maybe didn't in the immediate aftermath of the first lockdown. I've been incredibly impressed, I think, with the fintech sector. So notwithstanding that real disadvantage, the majority of lenders are still out there innovating. They're still lending. They're still bringing vital funding to the UK economy. Those that are participating in CBILS are right at the front of the pack, right? The likes of Funding Circle and iWalker and multiple other lenders. They're really at the forefront. You can't keep a good fintech sector down, but more impressively is the SMEs themselves. It's the reason why, I love doing this job, and I know my team members love doing the job. The SMEs, the survival nature, the survival instinct that they have, their ability to adapt, be agile, is just something to behold. And we've been just incredibly impressed with what we've seen from the SME sector in the UK as well as in the Netherlands.
That's absolutely brilliant. And thank you for that input, because it's so easy to just hear doom and gloom around the SME finance sector. And a lot of fintechs are SMEs, so they also need that funding. So, I guess it's a circle of life, effectively, that can really go on to help. But with that in mind, you've said some really nice words about what the UK government has been doing, what especially the UK fintech sector has been doing. But if I could leave the session with just a kind of an input onto where the future is for alternative finance in the UK, is it well placed, and what's the future for it?
Very well placed. So I'm always an optimist. So absolutely well placed. I obviously talk with the information if I know what we're doing from an innovation perspective. And 2021 is going to be a very, very big year for funding options. I think it's going to be a big year for the alternative finance sector as a whole. There have been some views espoused around, company failures being imminent, et cetera, I'm taking a more positive and bullish view. I think maybe actually, the number of businesses that don't make it might be a smaller proportion than what we think. I'm certainly hoping that to be the case, because again, we've seen an incredible response from businesses far and wide. So I think 2021 could surprise some people. I think if we do get the great news of a vaccine actually being launched, et cetera, and normal life, if it will ever be that again, coming back, it could be a real boom year for SME finance. And we've seen the innovation, or we know the innovation that we're doing. We know our peers in the market and within the ecosystem are going to be doing exactly the same. We're seeing increasing collaboration, more partnerships, more thinking outside the box. So I'm incredibly bullish and optimistic about the alternative finance sector. And I think the UK will continue to lead the way.
I've said this before multiple times. Alternative finance is a really bad term. We are not alternative. It's actually, we are mainstream.
Yeah.
We should be mainstream. We don't take weeks to decision and application. We take hours to decision and application. Businesses shouldn't be thinking of us as option 2 or option 3 and go to the banks first. I think that mindset has to change, and it has to start changing with us. People who classify themselves as alternative lenders are doing an injustice to themselves. We are mainstream lenders. And CBILS, if anything, has clearly proven it.
In that interest then, do you think, because obviously I know Nucleus was one of the first, but it's interesting, from my own studies, I think it's fair to say that the UK has been a really big spearhead for the fintech scene, and maybe I know you don't like the phrase, but for other organizations, alternative lending. Do you think the UK is well placed in terms of weathering this storm because of its fintech heritage?
It's the most developed ecosystem. I mean, a lender doesn't just survive because of being able to lend or having the right regulatory backup. It is absolutely needed, but at the same time, it's an ecosystem where how the courts function, how the legal system functions, how the credit bureaus function, what access to data we have. And all of that, UK is definitely miles ahead of a lot of other countries. So those things are still in place. As long as the regulatory support stays there, I think it will really bloom. The sector will bloom.
Amazing. Thank you so much for your input there. And I hope you've had a good time on the session. Thank you very much, as I said, for providing your expertise. And to all our viewers, thank you for watching. You can catch the rest of the series and much more over at www.fintechf.com, and of course, YouTube and LinkedIn, where I'll see you there. Thank you. Goodbye.